Hey, it's Jason Waters and welcome back to the channel. Made a list of 9 things that you should do or not do when you're looking to buy a home. So I'm gonna kind of go through these a little bit. One is don't make any large purchases. So if you are thinking about buying a house, don't make any large purchases because it could really impact your debt to income. Don't go buy a new car, buy the house first. Car lenders are much more lenient than mortgage lenders. Next, don't quit your job. You would think this is obvious that you shouldn't quit your job. I've seen people do it. So these are things that we tell everyone, but I've seen so many times where people, decided to take a new job. If you haven't gotten a paycheck yet, when you start the job, it can jeopardize your closing. Don't open new credit. Don't go to Home Depot, Lowe's, whatever your store is, and buy your washer and dryer for your new house on their credit card. Don't open a credit card at all. What happens is we pull your credit up front and then your credit is pulled again right before closing to make sure you didn't add any new debt. I had a case one time where someone went and bought their washer and dryer on a Home Depot card. We had to delay for 2 weeks. Pay your bills. I mean, I think it's kind of obvious you should pay your bills on time. Literally not paying your bills during the loan process is really the worst time not to pay your bills. Don't close credit accounts. This is something I could understand why people would think it's a good thing to close. When you close credit accounts, it could do a couple things. If you close a revolving credit card, even if it has no balance, you say, I don't use this, I want to close it, that'll hurt your credit. If you pay off a car loan, that's considered good debt. If you pay off the car loan, your credit score is most likely going to go down. So you don't want to pay it off until after you close on your loan. If there's a debt to income problem, talk to your lender. You would pay your car loan down to within 12 months, and then that debt can be excluded. So there are ways to do that if you need to, but don't pay it off. Don't co-sign on a loan. Talk about co-signing versus co-borrowing. They're really the same thing, or guaranteeing. If you're a guarantor on a loan with a bank for a car or anything else, then you're really like the borrower. If that person misses a payment, you miss a payment. That debt is added to your debt, even though you're not the primary borrower. So impacts your credit. It impacts your debt to income, impacts your credit score. If that person doesn't pay, it's like you didn't pay. Don't make any major financial decisions. You might want to fund your kid's college fund, which is great. Don't do it during the mortgage process. Don't move a lot of money around. If you put money into a bank, you want to document why, because large transactions will have to be sourced. Don't move anything around. Talk to your lender first. They're getting all the deposit information. If you make transfers, then the transfers will have to be documented. Finally, just communicate with your lender. Let them know what's going on. Ask questions first before doing anything financially related. Of course, I'm always here to help. So until next time, take care and happy house hunting or happy refinance.